What's up, everybody? This is Sunko, the Korean bro. Today is 2023, August 15. Just so you know, I'm writing blog these days, and I added my blog URL in the description below. So if you want to check that out, go see it yourself. I posted how much I earned so far in that blog. And also, I analyzed some of the companies that I heavily invested into. So if you're really interested in, go check out yourself. And let's see what stock we have. Okay. Hmm. Okay. The most important retirement table you will ever see. Hmm. History says the Dow Jones is headed higher. Two blue chip stocks by now and hold for years. Hmm. Okay. Let's see. Hmm. These could be the best growth stocks in 2030. Open Door Technologies and New may be moving in fundamentally different directions now, but they could both be heading the right way come 2023. Open Door Technologies and New. Let's see what they are. Okay. It's fair if Open Door Technology isn't the name at the top of your list of real estate stocks. As a flipper of residential properties, Open Door's business has fallen dramatically as rising mortgage rates and percolating recessionary fears have cooled buyer demand. Open Door is experiencing a retreat with business, but that is certainly not the case with Latin America's new. Let's skip this one because if I feel like it's gonna take some time to investigate what they are. So, hmm. Microsoft and Visa. Uh, okay, let's go see Microsoft. Uh, uh, Energy transfer and pigs. Um, Semiconductor on. Hmm. Okay, let's see this one. Okay, Roku. Every investor wants to own multi-bagging stocks, but it's not always so easy to find them. You need a stock that has a lot of high revenue growth, is trading a reasonable valuation, and has a large addressable market to penetrate. If you want to own $1 million worth of a stock, it helps to start with a significant sum like $100,000. Let's take a look at two stocks that could 10 times over the long run and turn $100,000 into $1 million. Roku has significantly underperformed since peaking in 2021. Hmm. Well, caught up in the tech sell-off and crushed in Nasdaq, the company has faced multiple headwinds, including a slowdown in ad spending and a poorly timed ramp up in expenses. Hmm. However, the company continues to put up solid growth in its user base and remains the leading streaming distribution platform. In the second quarter, active accounts rose 16% to 73.5 billion, and streaming hours were up 21% to 25.1 million, showing that demand for its services remains strong despite weaker revenue. The company is expanding its addressable market by entering new markets in Latin America and should be a significant beneficiary from the push into ad-based tiers from streaming services like Netflix and Disney and the accelerating shift from linear TV to streaming. Roku has struggled on the bottom line lately with an adjusted earnings before interest, taxes, depreciation, and amortization loss of $17.8 million and an operating loss of $126 million on a generally accepted accounting principle basis on $847 million in revenue. Roku stock is still down more than 80% from its earlier peak, and that sell-off sets up a buying opportunity in that stock, especially since the business should see stronger revenue growth return once the digital ad market rebounds. At the market cap of $11 billion today, there's plenty of room to run for the stock to be at 10 times bigger. Okay, next one is Sentinel One. Is it? Sentinel One. Think AI stocks have gotten too expensive. These companies still trade at big discounts. Sentinel One. Uh, Hassan vowed to trading after going public in summer 2021. The cybersecurity stock's most recent big sell-off came after management cut the company sales forecast for the year. Its midpoint guidance range had previously called for annual sales growth of 50.5%. The updated midpoint target estimate a roughly 41 sales increase. Wavering customer confidence in the face of macroeconomic uncertainty is resulting in tightening budgets, but sending one's big valuation pullback could be a buying opportunity for long-term investors seeking to benefit from artificial intelligence and cybersecurity trends. SentinelOne's platform incorporates multiple layers of AI technologies in order to stake out and shut down cyber attacks. Okay, Fiverr. Okay, Fiverr International stock price is down roughly 91% off its high of recent years. The company has experienced decelerating revenue growth as enterprises pull back hiring on the platform. Okay, after growing revenue by 77% in 2020 and 57% in 2021, Fiverr's international revenue expanded by 13% in 2022. That said, the short-term woes could be an excellent opportunity for investors looking to buy beaten down stocks that could benefit from AI. Fiverr is a platform that brings together gig workers offering services for sale with businesses looking to hire people for a short-term task. The people offering services on Fiverr's platform will become more productive using AI. Of course, businesses will be interested in spending more on Fiverr's platform if they see the services are becoming more effective. The robust revenue growth of earlier years has already boosted Fiverr's cash flows. Between 2020 and 2022, Fiverr's cash flow from operations totaled $85 million. That was a huge turnaround from the $71 million negative the company reported in the metric the previous 3 years. Moreover, the 91% decrease in the market price has brought Fiverr to an inexpensive valuation. At a forward price to earnings ratio of 14.6, the stock is near the cheapest it's been according to this metric. Investors looking for AI stocks, not trading at nosebleed valuations like so many are, have an excellent choice with Fiverr. Alphabet and Nvidia. Let's get Alphabet, okay? Hmm. Alphabet has a current market cap of $1.65 trillion and is considered something of a shoe who to join the $2 trillion club. To achieve that milestone, the stock would only need to increase by roughly 23% from its recent closing price. That works out to about 2% gains annually, hardly a high bar to clear. It's worth noting that Alphabet is a former member of this prestigious club. The stock initially surpassed this benchmark in November 2021, just days before the start of the bear market. Blah, blah, blah. Okay. Hmm. Okay. Fed interest rate debate is shifting. Okay. Hmm. Let's read this one. Hmm. AMD is set to launch powerful GPUs aimed squarely at training the most advanced AI models. Intel, Nvidia, and what else we have? CFO change something to worry about. Hmm. Uh, Berkshire Hathaway at VGM. Okay, let's look at the market broadly. Okay, America is broke. Robert Kiyosaki warns a crash landing is coming. Says the Fed has been smoking fantasy weed. Here are the three assets last for shocking proof. The U.S. market showed impressive gains in 2023, and the latest gross domestic product figure exceeded expectations. But according to Rich Dad Poor Dad author Robert Kiyosaki, the picture not be as rosy as it appears. Don't they know the stock market is up because Biden raised debt ceiling? America's debt is going up, so stock market going up. He wrote in a recent tweet, "America's broke." The author is concerned about America's escalating debt was echoed by Fitch ratings. Shortly after that tweet, Fitch downgraded the United States long-term foreign currency issuer default rating from its highest AAA to rating to AA+. The credit rating is pointed to expected fiscal deterioration over the next 3 years, a high and growing general government debt burden, and an erosion of governance as reasons behind the decision. While some experts expect a soft landing for the U.S. economy, Kiyosaki is less optimistic. First, shoe to drop Fitch Rating Services downgrade U.S. credit rating from AAA to AA+. Braced for a crash landing, he tweeted, "Sorry for the bad news yet. I have been warning for it over a year. The Fed, Treasury, big corp CEOs have smoking fantasy wind." Closer look at these assets. Still prefer gold, silver, Bitcoin, Kiyosaki said. Hmm. The golden gridlock billionaire Ken Fisher sees a bullish tailwind ahead for stocks for the two names he beat back: United Health Group, and what else we have? BlackRock. Okay, let's see. As Federal Reserve officials close in on the end of their tightening campaign, the debate is shifting from how high interest rates need to go to how long they should stay elevated. Okay. Uh, Inflation pressures are easing, which could give policymakers room to keep interest rates at or near current levels for the time being. Still, price gains remain well above the central bank's 2% target, making policymakers hesitant to declare victory. Introducing the discussion over how long officials may keep rates steady even if inflation continues to decelerate could help them push back on expectations for rate cuts and allow them to keep putting downward pressure on the economy. This is the policy dimension that they will likely focus on the most going forward. Not how much bigger to take the federal funds rate, but how long to keep it at these levels, said Brian Sack, a former senior Fed official who earlier this year left the D.E. Shaw and Co. after about a decade as head of the investment firm's Global Economics Group. There's still a lot of scope to tighten financial conditions in that way if they wanted to. Fed officials unanimously raised their benchmark rate last month to a target range of 5.25% to 5.5%, the highest level in 22 years. Minutes from that gathering set for release on Wednesday afternoon could provide more insight into whether most policymakers believe those increases have already worked their way through the economy or if they still expect to see some more effects. Excludes often volatile food and energy costs rose 0.2% in July for a second month, marking the smallest back-to-back gains in more than 2 years. Customers' year-ahead inflation expectations also expected a decline in early August, matching a more than 2-year low. Hmm. Hmm. Okay. Anyway. Hmm. Mm, okay. One more article, and then today I'm done. Okay. Hmm. It's getting too late. It's already past 12. Hmm. Anyway, let's make it short. Today, this is it, and I'm gonna see you tomorrow, okay? Bye bye, and have a good night, okay? Bye bye. Getting too late tonight.